Hey everyone. So Warren Buffett just wrapped up his dialogue in the 2020 Berkshire Hathaway Annual Meeting. And while he was talking to an empty convention center, his comments during these uncertain times provide a glimpse into the thoughts of the world's greatest investor on his company, Berkshire Hathaway, stocks, the economy, and the United States. Generally an optimist, Warren's comments can put short-term events like the recently rapidly declining economy and stock market into the longer-term perspective of the entire history of the United States. He did exactly this and provided insight into his recent stock moves, including the sale of his entire airline stake. Why did he sell the airlines? And where does the stock market go from here, according to Buffett? We are going to cover all of these answers to these questions in this video. But first, if you decide you like this video, don't forget to drop a like and subscribe to the channel to hear more about Warren Buffett's comments after his interview on Monday. So let's not bury the lead here. Warren admitted during the Q&A session during the annual meeting, when asked about his recent airline sales, that he completely sold his airline stakes, calling them a mistake on his part, but was still an investment based on his positive expectations for the airlines. Though he originally considered that a catastrophic scenario could happen, like the one we are in now, he felt that the probability was so low that he was willing to bet on the airlines, with people flying more than ever. Here is exactly what he said.
I just decided that I'd made a mistake in evaluating. It was an understandable mistake. It was a probability-weighted decision when we bought that we were getting an attractive amount for our money when investing across the airlines business. So we bought roughly 10% of the four largest airlines, and we treat it mentally exactly as if we were buying a business. And it turned out I was wrong about that business because of something that was not in any way the fault of four excellent CEOs. The airline business, and I may be wrong, and I hope I'm wrong, but I think it changed in a very major way, and it's obviously changed in the fact that the four companies are each going to borrow, perhaps an average of at least 10 or 12 billion each. Well, you have to pay that back out of earnings over some period of time. I mean, you're 10 or 12 billion dollars worse off if that happens. And of course, in some cases, they're having to sell stock or sell the right to buy a stock at these prices, and that takes away from the upside down. And I don't know whether 2 or 3 years from now that as many people will fly as many passenger miles as they did last year. They may and they may not. But the future is much less clear to me about how the business will turn out through absolutely no fault of the airlines themselves. But something that was a low probability event.
Did I understand correctly, Mr. Buffett, to say that Berkshire Hathaway sold its interests in 4 different airlines? And if so, can you name them? Can the names of those airlines be identified?
They're the 4 largest U.S. airlines. It's the American Airlines and Delta Airlines and Southwest Airlines and United Continental. We like those airlines, but we don't like. The world has changed for the airlines, and I don't know how it's changed, and I hope it corrects itself in a reasonably prompt way. I don't know whether the Americans have now changed their habits or will change their habits because of an extended period if it happens that we're semi-shut down. We would have bought other airlines too, incidentally, but those were the 4 big ones, and those are ones we could put some money into, and we put whatever it was, 7 or 8 billion into it, and we did not take out anything like 7 or 8 billion, and that was my mistake. But it's always a problem if there are things on the lower levels of probabilities that happen sometimes, and it happened to the airlines, and I'm the one who made the decision.
But Warren, just to clarify on his question, he asked, did you sell your whole stake in all four of those
the
companies?
answer is yes. Yeah, when we sell something, we sell something, very often it's going to be our entire stake. I mean, we don't trim positions or that's just not the way we approach it any more than if we buy 100% of a business, we're going to sell it down to 90% or 80%. I mean, if we like a business, we're going to buy as much of it as we can and keep it as long as we can. But when we change our mind, we don't take half measures or anything of the sort. So I was amazed at how, frankly, now we were selling them at far lower prices than we paid, but I was amazed at the volume. The airlines always trade in large volume relatively, but we have sold the entire positions.
I think a great lesson can be learned from Warren's commentary about his sale of the airlines. He said, when we change our mind, we don't take half measures. In other words, you can change your opinion. If you decide that an investment you made is less likely to produce the results you originally expected, or you can no longer predict the future outcome of a business with a degree of certainty, don't take a half measure by selling only a portion of your stake. Basically, he's following Keynes' advice. When the facts change, I change my mind. You'll also notice when looking at Buffett's company's recent filing that they have their highest cash position ever and have been a net seller of equities with small purchases of currently unknown stocks and the large sale of airline stocks, despite the recent sell-off that many expect would produce the raining gold opportunities that Warren seeks when people are fearful. And I think we can all agree that fear was in play in mid-March. Additionally, Berkshire has only been repurchasing a modest amount of their own shares. This is how Buffett explains all of this.
Well, as I explained, the position isn't that huge when I look at worst case possibilities. I would say that there are things that I think are quite improbable, and I hope they don't happen, but that doesn't mean they won't happen. I mean, for example, in our insurance business, we could have the world's or the country's #1 hurricane that it's ever had, but that doesn't preclude the fact we could have the biggest earthquake a month later. So we are not we don't prepare ourselves for a single problem. We prepare ourselves for problems that sometimes create their own momentum. I mean, 2008 and 2009, you didn't see all the problems the first day when what really kicked it off was when the Freddie and Fannie, the GSEs, went into conservatorship in early September. And then when money market funds broke the buck, I mean, there are things that trip other things, and we take a very much a worst case scenario into mind that probably is a considerably worse case than most people do. So I don't look at it as huge.
The reason Warren hasn't been heavily investing in this environment seems to be due to 3 reasons. 1, he cannot predict the potential future effects that will come from this pandemic with any degree of certainty, and wants extra cash available in the event things get worse for his own businesses. Secondly, he is actively looking for an elephant-sized acquisition that he views as additive and beneficial for Berkshire. But the Fed stepping in with all of this lending recently has limited his opportunities. And related to the Fed, thirdly, he admits that we do not know what happens when you voluntarily stop the economy, stating that there is no existing parallel in history. Maybe he is concerned that rates will rise rapidly in the future with the extreme amounts of money being pushed into the economy. The recent Fed injection of money into the system greatly exceeds that from the Great Recession and could test the theory that you can print infinite money without inflation. If he is concerned about the potential for inflation, that could make sense because higher interest rates resulting from higher inflation makes equities less valuable. Despite Warren's potential concerns, I think his most important comments from this meeting occurred at the beginning when he highlighted points in U.S. history and how far we have come as a nation. For example, the United States was only 74 years old during the Battle of Gettysburg, and President Lincoln questioned whether that nation or any nation so conceived and so dedicated can long endure. Warren estimates that 6% of the males between age 18 and 60, the workforce demographic at the time, were killed during the Civil War. In today's terms, that would equate to approximately 4 million males. Though these recent events have tested the United States, you could argue that Gettysburg was a larger test for the country with a greater percentage of the population being affected then, at least based on current numbers. If America could persevere through Gettysburg, we will persevere now. Warren also referenced the value of the stock market in the United States at various times in history. I think the big takeaway here is that since Warren graduated college in the early 1950s, the stock market has increased 100-fold. In other words, every $1 invested in 1951 would be worth $100 today, not accounting for dividends. That speaks to the power of the United States and American ingenuity over the long term. And as Warren emphasizes,
Nothing can stop America when you get right down to it. And it's been true all along. It may have been interrupted with the scariest of scenarios when you had a war with one group of states fighting another group of states. And it may have been tested again in the Great Depression, and it may be tested now to some degree. But in the end, the answer is never bet against America.
I hope you all enjoyed my highlights of Warren's commentary from the 2020 Berkshire Hathaway Annual Meeting. If you did, be sure to leave a like on the video, and I will try to make more videos like this one in the future. And if you want to see some more Warren Buffett content coming in the near future, please subscribe to the channel. Thanks for watching, and have a good day.